Hello again, everybody. It is Tuesday, July the 23rd, and I am Dr. Richard Smith, Executive Chairman of the Foundation for the Study of Cycles. And this show is about trading market cycles, and particularly short-term market cycles. We've been at it for a few weeks now. And looking at shorter-term market cycles, oftentimes intraday market cycles. And this week, we're going to be looking at natural gas and asking the question, is natural gas ready to explode? So this is kind of a crazy one. So we're going to take our time. We're going to go through the setup for natural gas, and we have a buy signal from natural gas on my intraday indicators, but we need to be clear about what the big picture is here, what the opportunity is here. So I'm going to take my time, go through the big picture, show you the setup, tell you what the cautions are, because there's reason to be cautious here. But I think for a tight stop, low risk opportunity, it's setting up to be very interesting. So with that as preamble, let's get into some charts. All right, here, let me just make a couple adjustments on my screen here. And whoops, there we go. All right, so we're not going to start with the cycles. Going to give you the big picture here. And I know there's a lot going on these charts. I'm going to walk you through it. Don't worry. Feel free to shoot any questions over that you might have. But we're going to start out looking at sentiment in natural gas here. So this is price history on natural gas, okay, 23 and 24 here. And on the futures contracts. And then down here in particular, we're looking at what are the commercials doing in natural gas. This is over the past year. The commercials are the, the producers and consumers of natural gas, not the traders. And we can see that on the whole, the people that know the most about natural gas are accumulating, they're buying, okay? And, what's going on with price? It's been hovering down here between $2 and $3, even dipped below $2 back here. And the people that know the most about natural gas keep buying, okay? So that's the first thing we want to note. And then we can look at what is the small trader doing, thanks to fellow Cycles, Foundation for the Cycles board member, Jake Bernstein, and his daily sentiment index. A lot of what I'm showing you today beyond the cycles is from fellow Foundation board members. Actually, that previous chart is from Andy Pancholi's work over at the Market Timing Report, where he integrates commitment of traders data into his analyses. So we've got a great board of directors, great resources here at the FSC. I can't believe how much we give away for free. Thank you, all of you. This is all supported by your contributions to the FSC, your memberships, your donations. We appreciate very much the opportunity to give back here. So we can see from Jake Bernstein's daily sentiment index that the small trader over here is, a little bit bearish, right? Came down to almost 30. Didn't get down below 20, so it's not a big buy signal, but definitely not a big sell signal either. So I'd call it kind of neutral to bullish from the small trader sentiment. All right. This is also from fellow board member Jake Bernstein, and this is from his seasonal trader.com, and Jake is going to actually start doing a seasonality show here on Cycles TV soon. So keep your eye out for that. And this is looking at the seasonal trends in natural gas. This is 1990 to 2023, so over about a 33-year period. And it's the average behavior of natural gas in the month of July and the beginning of August. And we're here, in the end of July into early August. And we can see that historically there's been a little bullishness here in this last week of July, and also over into August and even September. So overall, seasonals are cycles, annual cycles. There is a bullish tilt starting especially in the last week of July. Another reason to be cautiously optimistic. This is just drilling down. Actually, sorry, that was the dailies, right? So this is looking a little more at the overall seasonal into September and October, right? Yeah. Again, end of July, early August, some bullishness, and overall bullishness into the fall. All right, so we got accumulation from the smart money, a little bit of skepticism from small traders, some neutral to bullish seasonality. One more look at seasonality here. This is just the average monthly return. And we can see July and August slightly negative. Okay, so this isn't a back up the truck moment right now, but look at September right here. September and October are the two most positive months. So I think there's an opportunity to be starting to dip our toes into natural gas here. We'll get into why that is and also what the additional benefit might be for your portfolio. So this isn't like a short-term trade this week only. Yes, there's a little bit of an opportunity. We'll see that. But this is an opportunity, I think, for some longer-term accumulation for a possibly big move in natural gas into the fall. And we're getting started a little early here in July and August, even though there can be slightly negative months. September and October is what we want to get ahead of. All right, now the bad news. Natural gas trends. I've talked about how I look at trends to support the cycles, right? And the trends in natural gas have just been awful. I mean, you don't need to look further than a chart of natural gas to know that the price has been going down. These are my trend indicators. And again, I'm looking at 20-minute data right here. Okay. And then 2-hour data here and daily data here. And I look at the trends, for the past 250 periods, past 500 periods, 1,000 periods, 2,500 periods in each of those time frames. And there's a lot of red in this chart. So the trends across most of these time frames have been going down, or are negative, I should say. We have a little bit of green here with a pretty big number, 39, right at the lowest time frame trend. And we can look overall here to see that over the past week, the trends in natural gas have been turning up. So this last one here, you might not have seen this before. This is just a look back over the past couple of weeks of what this total trend number here, currently about -4.5, has been doing. And over the past week, it's risen from -12 to -4.5. So the trends are not as bad as they were, as they have been, right? All right. So trend is not our friend here, but we do see a little bit of encouragement in the short end of the trend spectrum, and all of these trends are getting a little less worse, right? That's when you get explosive moves, when things are going from terrible to not terrible with caution. This is just the price history of natural gas futures daily data, over the past 15 months or so. And what I just wanted to show here was this support around $2, right? We got a nice bounce here off of $2 recently. So another reason to be cautiously bullish. I'd say a break below $2 here is a reasonable stop loss if you're going for a short-term trade. If you're looking to accumulate slowly a small position to leg into, get a head start, that you plan to hold into the fall, then around $1.50 or so is your worst case scenario. All right, so I think that is a lot of the setup. One more thing here. Probably should have put this one at the end of the presentation. I know this is a lot of numbers here on the screen, but what I really want you to see, this is an ETF view, and UNG is the natural gas ETF. And all these other ETFs, all these other tickers here are popular ETFs, the Spider sector ETFs, some other ones. And what I want you to see here is that natural gas is uncorrelated to almost everything, right? So if you look down here, black means uncorrelated, green means perfectly correlated because natural gas is correlated to itself, okay, 100%. But everything else, natural gas is uncorrelated. I mean, the highest correlation here is like 16.8%, so less than 20%. So this is why natural gas, another reason natural gas is very interesting to me, potentially interesting to you, it's uncorrelated to almost everything else. So we've talked a little bit about uncorrelated bets, Ray Dalio's Holy Grail portfolios, good uncorrelated return streams. So natural gas is one of those assets that I think people overlook, if nothing else, because it's very uncorrelated to almost everything else, which can give us free exposure, something we're going to be talking about more in the weeks ahead. All right, so I think that's all with the setup. Now let's get into the cycles. Certainly on a weekly basis, natural gas has some very bullish cycles going on. And they've been going on for a while, back to early 2023. Part of the reason I think this might be the time is that, these cycles have disappointed us or natural gas has disappointed us for quite a long time, right? We've certainly arrested the decline here since early 2023 with the 73 and 147 cycle here. Note, these are pretty much perfect harmonics, 1 and 2 harmonics. So that gives even more encouragement here. We got the 73 here and the 147 here. They look really great on the spectrum. They're number 1 and 2 according to the AI, and they got strong strength and strong Bartels, and they're perfect 1-2 harmonics. So meanwhile, we haven't gotten a big up move. We're right about back to where we were when we bottomed back here. We made a new low here. Momentum never really deteriorated, and momentum, the cyclic RSI, is higher here than it was back here. So from a weekly setup, this is a really juicy looking setup, right? Weekly charts can take a long time to unfold. 73 weeks is more than a year. This, top here is in 2025. But again, the seasonal setup, the weekly setup, the fact that the commercials are buying, that these small speculators are skeptical, all of that makes for a really interesting setup. Now let's look at the daily cycles here. We have this 77-day cycle, Sticks out clearly on the spectrum. Okay. And it's the number one cycle with a Bartels of 88, the number one strength cycle. And has a nice bullishness here. I'm going to jump over to the live analysis here now. Okay, so here's the 77 period cycle using more data than we were using in that chart. But I just wanted to show you, because I didn't have the cyclic RSI on my PowerPoint chart. So I wanted to show you here what's going on with the cyclic RSI. We haven't gotten a cross out of the bottom and a move back up into the bottom, so it's not a buy signal in that sense, but we've definitely gotten a turn up in the momentum here on the daily charts, and we've got, you know, the number one cycle showing an uptrend into let me zoom in for you here so you can see the actual date. August 20th, 2024 on the daily cycle. So we have the daily cycles backing up the weekly cycles now, backing up the bullishness from the smartest people around natural gas, right? So now let's dig into the shorter term cycles. These are the 2-hour cycles in natural gas. I'm using about 1,600 bars here. I know you can't see that, so let me zoom in. 1,600 bars. Going back to this high back here. And we're a little into this move already, but when I look at the number one and number two cycles, this 107 and 313, 1 and 3 harmonics, right? We've got some nice bullishness continuing on through this week. And we had a big buy signal from the cyclic RSI here, right down here at the bottom. Okay, this was the setup coming into the end of last week. And going now up out of the top of the band and still pointing straight up. Okay, so this move is likely not done. So this is the short-term setup on the 2-hour chart that is suggesting strength in natural gas for this week. Would have loved to have gotten this to you Friday, but I don't think this move is over yet. And I think that there's more strength to come here, certainly until we see this momentum start to fade. And that is the setup of the week that I've been able to identify from all my setups. Okay, and then looking at the bigger term picture again, we've got the bullish sentiment from the commercials, the skepticism from the little guys, the seasonality, the weekly cycles, the daily cycles, and a good trigger on the 2-hour cycles to hopefully get this snowball, in this case, rolling uphill. So that's the big picture. We can also go down and look at one lower time frame, and I've got that here on the 20-minute cycles. We've got a nice cycle in the 20-minute here. This 280 cycle looking back over about 1,300 bars right here. Okay. Now we've got some bearishness from this cycle, and the momentum has been going down since last night. Okay. So be looking, if you're following these intraday cycles, the 20-minute cycles. Let me make sure nobody's urgent. Okay. We've got a little bit of bearishness maybe into tomorrow, but keep an eye on this. Could see some bottoming and support when it comes into harmony with the 2-hour cycle above. Could be another interesting opportunity. All right, so that is the setup on natural gas. Let me take a minute now and see if y'all have questions. All right. So hopefully you've gotten the big picture, how I look at things from big picture all the way down to 20 minutes, right? From 2 years to 20 minutes. And learn something about how I'm doing the cycles analysis and how I'm doing intraday analysis. All right, so got a question here from Juan. Is it possible FSC apps divide cycle up and cycle down? I'm not sure what you mean, Juan. If you want to clarify your question, I'd be happy to see if I can help out. All right. Let's see. Dave, good to see you. The 200-day moving average on UNG has been important support and resistance previously. I wouldn't buy it below the 200-day. So Dave, I'm not going to argue with you. That's, I've preached that trends ideally support cycles. Hopefully I've made that clear that this is a rare case where you might consider, dipping your toe into a longer term opportunity, because the longer term indicators of cycles are strongly supporting an up move here. But I agree, you need to be cautious with these trends. If you do get in, you have a tight stop, or you're holding it for a longer period of time to kind of leg into a bigger position. And that's what I'm really looking to do. Maybe I can get a little juice this week from a short-term trade, but I also want to be positioned because I think one morning we could wake up and natural gas can be up 10 or 20%. And I'd like to have a little position in that is basically uncorrelated to everything else in my portfolio. So that's the opportunity here. Let's continue on through the questions. Dan, could you also give us a brief comparative look at European natural gas TTF equals F? Sure. Take a look at that in just a minute. Mike, is there a link to the site you used to make the correlation table? Mike, that came from risksmith.com. Here, I'll actually show it to you here. Which one of these gives me? This is risksmith.com. I'm still working on it. It's not quite all the way there, but if you want to play around with it, you can sign up for free. And I'm not sure which one of these portfolios that came from, but yeah, this is where you can see, once you have a portfolio, you can see a correlation matrix, covariance matrix on anything. So feel free to sign up, play around with it. Love to get your feedback. That's where that came from. All right, going back here. Max, what are some of the earliest indicators that the cycle will break abnormally soon, becoming bearish? Max, if you want to, watch the shorter term cycles, this top here, in the 2-hour cycles, if you want to get back on the bearish train, that's a good spot I'd be paying attention to, especially seeing if you get a strong break in momentum. Break below $2 would also be a concern. So that's where I'd be looking. All right, so somebody suggested TTF equals F. That's European natural gas. Let's take a look at that. I haven't looked at this one before, so I am hoping this is natural gas. I'm not sure. Why don't we take a quick look at Yahoo Finance? Yep, Dutch natural gas calendar. All right. Oops, okay. All right, so this is initially what? Daily data. Let's go back and grab that high. This is about 850 bars, so actually maybe we should use all of it. You can see if it goes back further, if there's more historical data we might want to look at. Yep. All right, well, cycle-wise, got this 230, 96. Spectrum's not great on this, I would say. Let me go back and grab this low and see if that does anything for us. Number one cycle is this 248. Again, it's just a little flat here in the spectrum. Let's try to just grab all the data. Goes down to 243. Okay. And if we go in here, make sure we're using the current cycle phase. Yeah, got some lingering bullishness, I'd say, here into August, at least on the daily data. And it looks like that's about as far back as it goes, 2018. So probably not worth digging into the weekly data. All right. Let's see here now. Other questions? I think we covered that. I've heard of a method called the summation series for finding cycles, where you count candles between high, low, and half double multiplied by 16.18 to find turning points. Not familiar with it. Yeah, just I have no idea. Could be interesting, but I haven't heard of it. If you want to write something up and share it and send it in, be happy to take a look at it. Yep, ETF slippage, definitely something you need to pay attention to. But for the type of length that we're looking at, I think not a big deal, especially if it's a small position in your portfolio. So, but are you also minimizing risk? Great question. And your position size is a big part of what minimizes risk. You've got, a stop here below $2 for a shorter term trade and below $1.50 for a longer term trade. So you can factor that in too. And finally, if you look at how natural gas is very likely uncorrelated to everything else in your portfolio, you'll see that you can get basically some free risk exposure with natural gas. So that combination of free risk exposure plus a good long-term setup, plus some short-term indicators, short-term support, is why I think it's worth your consideration for a small position in your portfolio that might grow into a larger one and that you could add to if this hypothesis is right and things continue to unfold in your direction. All right, so just going back to wrap up here. Again, kind of my summary, my trends. Yep. Trends are still negative. There's some bearishness in the 20-minute cycles, the shorter term cycles, but some good bullishness in the 2-hour cycles, certainly supported by the daily and weeklies. And that's the big picture, but be careful with this one. A small position a clear stop, something that you can build on into the fall. That's the opportunity that I see here with this one, and uncorrelated to probably everything else in your portfolio. All right, so just wrap up with big picture of what I see going on overall. In terms of my 2-hour signals, the best signals I have are buy signals on the E-mini and the NASDAQ right now. Although, we're definitely seeing some downward pressure from the daily cycles, the trends starting to break on the shorter term time frames, but not really longer term. So I would not sell short into this 2-hour buy signal from the cycles. Okay, if you want to go short, wait for this to top and consider getting on board a downtrend from the daily cycles once these the bullishness from the 2-hour cycles have worked their way off. You can see my buy signal on the 2-hour on natural gas here. A lot of bearishness overall from the cycles in terms of equities and treasuries even. I have not gotten out of the long treasury position I established last week when I talked about the 2-year treasury notes, right? I'm using this sitting tight through this downturn in the cycles because I still think there's a longer term up move in treasuries coming. The metals have certainly proved out their bearishness from the cycles last week, getting some reprieve right now. We'll see if they make a rally here or not, but overall, I'm still leaning bearish on the metals. Bitcoin and Ethereum, the trends are very positive. The cycles are still worrisome. And, that's it, really. So if there are any final questions, let me see here. A little bit off topic here. Did you ever analyze a rate of change of an underlying? Not sure what you mean by underlying, Dan. Yeah, maybe you can add a little more to that question. Juan, can you share the relationship between GAN and cycle study? I'm not a GAN expert. We do have GAN experts in the foundation. I'm not one of them, so I don't have too much to say about that. We're doing dynamic cycles analysis, so we're using digital signal processing with statistical validation. That's different than what GAN was doing. I think he tended to use more fixed cycle lengths, but I'm not a GAN guru myself. There was a chart for Lars that Lars had done on gold divided by natural gas. Good question. I don't have an update to it, but I'll ask Lars about it, and maybe we can look at it next week or post it to our social media. And underlying any data series, S&P 500 natural gas. So looking at the rate of change, Dan, let's see, rate of change of an underlying. Isn't that kind of what momentum is, which we factor into our analysis with the cyclic RSI? I do think rate of change is important, and I basically integrate it with momentum. All right. Let's see. I think that's it, folks. I appreciate you hanging in there. Again, this is one to be careful with, but I do think it's an interesting opportunity. I am long myself, and I'm looking to build a position into the fall. And we've been disappointed on natural gas many times over the past year. And sometimes the third time is the charm. So careful with this one, but keep an eye on the cycles. I think it's a good opportunity, and I hope you can consider integrating it into your long-term portfolio. All right, thanks everybody. I'm not sure I'm going to be able to make this time next week because of a prior commitment, but we'll keep you posted. So if I don't see you next week, I'll see you in a couple of weeks. Thank you for your support of the Foundation for the Study of Cycles.